Hi guys, to set the stage for today's video, take a look at this clip and then we shall continue.
EV maker NIO flying more than 7% on Wall Street. This is what the tally looked like on close. Good run actually for the stock. Its Hong Kong shares currently trading 2.5% higher. This after the company debuted its direct competitor to Tesla's Model Y. CNBC's Evelyn Chung caught up with NIO CEO William Li to talk about the launch and their business plans.
Onvo targets the mass family market. From this perspective, it's quite different from NIO, which targets the premium market. NIO's main competitors are BMW, Benz, and Audi, while Onvo's main competitors are Volkswagen, Toyota, Tesla's Model 3, and Model Y. If we look at the target market for Onvo, the mid-size SUV market, even if it's a traditional fuel-powered car from Toyota that costs 100,000 or 200,000 yuan, the market in China is very large. I think because we provide the option buying the cars but renting the batteries, it can be quite attractive for these fuel car users. As an EV itself, the Onvo L6 priced at around 200,000 yuan is also attractive to EV users.
The CEO also spoke to NIO's ambitions in a more global sense, despite the looming threat of tariffs in multiple markets.
NIO as a brand targets the premium market. Globally, the premium markets are mainly in China, Europe, and the US. For reasons we all know, it's not easy to expand to the US, and with the extra cost coming from tariffs in Europe, NIO is less competitive price-wise in Europe. But Onvo and the Firefly brand that we are going to launch in the future are different. They are targeting a broader global market. First, these two brands are more strategically meaningful than NIO in the global market.
Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. You see, people still don't understand what's happening. A lot of people still don't. Some do, but the most doesn't. What is happening is NIO established itself as a premium brand with superior technology, leading cutting edge technology, So we're the front runner all the time in innovating, and the rest always trying to play catch up. We made sure and established ourselves in the premium sector, outselling the premium market. And now we came out with sub-brand, our first sub-brand of many to come, that will devastate and dominate the landscape, because now people recognize us as a top premium brand globally. But not just the sub-brands, but the sub-brands will be 5-star rating, just like Onvo, the rest of them will, including Firefly and all of the brands coming under Firefly, not just all of the brands coming under Alps. Why is that so important? Because like William Li said in that clip, even with the tariffs, we will be competitive with those sub-brands, because it'll be 5-star rating, it'll come in at a very competitive price point, and it will devastate the market. This is yummy for the tummy. So what else do I have for you guys? Well, I want to thank Money Making Melvin in Florida for sending this for me. And again, this was from the Motley Fool. You see, they pretended not to know these things were coming, and I told you guys that this is the way the game is played. Now all of them are changing their rhetoric. It said nearly 1.5 billion from its operations in the first half of this year. In fact, Chinese electric vehicle maker NIO has never made a profit, but that helps explain why the stock has lost more than 80% of its value over the past 3 years. But there was also some meaningful and positive news in NIO's second quarter. The business momentum has translated to the stock price, as NIO's American depository shares have surged more than 40% in the last month. The company's market cap is now at 11 billion. So our share price has surged over 40% in the last month, and this is why the shorts are panicking. And there's more panic for them to come, guys. The market cap is now at 11 billion and the EV maker ended the quarter with 5.7 billion in cash and equivalents. That makes now a good time to look at what NIO's next big move will be and whether it's a stock that should be in your portfolio. A step towards profits. One of the most notable achievements from NIO in the second quarter was to significantly boost its vehicle profit margin. Vehicle margin, which is based on revenue and cost of new vehicle sales, was 12.2% in the quarter, compared to just 6.2% in the prior year period. So we've doubled it. This was helped by revenue that nearly doubled year over year. After years of fits and starts, it appears that NIO is finally hitting its stride. And remember I told you guys they're going to be saying this? We saw it, but how couldn't they not see it? They saw it too, but this is the way the game is played, guys. He said that comes as global competition has grown in the EV sector. So even as the competition is growing, we're accelerating beyond the competition. What does that tell you? And a lot of these EV makers like Audi is in trouble, Fisker, and so many more. NIO has sold over 20,000 EVs for 4 consecutive months for the first time. And let me just point this out. Around this, the 10-year period with Tesla, they were selling like 2,000 vehicles a year before the mass market brand, the Model 3 came out, in comparison to what we're doing now. Just food for thought. That has aided in gaining market share and boosting margins, it said. The company just set a new quarterly record with more than 57,000 units shipped. It also provided guidance for third quarter. And what are those guidance? You see, the guidance is very important. It says the third quarter vehicle deliveries in range of 61 to 63,000, beating the 57,000 units. William Lee noted that the company's second quarter sales volume led it to securing more than 40% of market share. Yes, the lion's share of the market, with China for EVs priced above the equivalent of about 42,000 US dollars. And NIO has plans to keep expanding its focus on the luxury end of the market, has helped it compete against Chinese EV leader BYD, which claims the lion's share of the lower priced Chinese EV market. But now with Onvo coming, that mass market brand that I just talked about in my last video that he says is going to make the L60 look tame, with Firefly coming, what do you think? What share of the market will we take? Yes, we're coming after BYD. This is why I told you guys, the race is not for the swift, but for the ones who can endure. And some of the shorts were coming and saying on my channel, oh, BYD is the company to buy. We'll see who's the company to buy soon. Addressing range anxiety. NIO has been a leader in China and elsewhere in working to expand battery charging and its unique battery swapping technology. So now they're recognizing the battery swapping. They didn't know that before, conveniently. They said it was cash burn and it's yet to make a profit, of course. But listen to what they're saying now. NIO's battery swap stations give EV buyers the options to lower the upfront vehicle cost by paying a monthly subscription for its battery as a service plan. Drivers can use its swap station to replace drained batteries with fully charged ones, a process that takes less than 3 minutes. Yes, it's just a little over 2.5 minutes. Now they know that. Last month, NIO announced a new plan to strengthen its charging and battery swapping network across China. Now they know that. Its Power Up Counties plan will accelerate the build out of those networks. We're going to blanket China entirely with battery swap stations. The new gas stations, dividends paying company in the making. Dedicated revenue even if we don't sell one more EV, selling back power to the grid, etc., etc. As of August 31st, NIO had over 2,500 battery swap stations globally, with over 800 strategically located on China's expressways, With over 577,000 NIO vehicles on the road, it has provided battery swaps more than 50 million times. Its new plan will result in power swap stations being available in thousands of Chinese counties, guys. Thousands of Chinese counties by the end of next year. It also plans to build a new factory to create up to 1,000 power swap stations annually. Mass market brand, they say. NIO's new Onvo will also utilize the expanding charging and swapping networks. Onvo is NIO's new entry-level EV brand that seeks to tap more of a mass market and take on Tesla's Model Y. The Onvo L60 midsize SUV has a starting range of about 30,000. That brand combines with NIO existing and growing charging technology, and remember 30,000 without battery as a service. With battery as a service, sorry. So it says investors are willing to be aggressive. Oh, you're right, son. So that 30,000 is without battery as a service. With battery as a service, we all know. Investors who are willing to be aggressive could add NIO stock now, anticipating its next phase of growth with Onvo. Otherwise, watch for signs that Onvo is gaining traction to be somewhat more conservative and still potentially get ahead of NIO's best move. So you see, guys, how the rhetoric is changing in a massive way, because the institutions, in my opinion, has beaten us down to the point where they can gobble up shares and chase out most of the sheeps. That doesn't mean that we're not going to have pullbacks as time go by. The same way we dropped, we went up, we dropped, we went up, we dropped, we went up. The same thing is going to happen as we go up. We'll make a slight pullback and shake off the weak. The institutions will gobble up more. As the institutions continue to see us grow and become closer to profitability and even become profitability, there will still be rhetoric from time to time, because now it gives them confidence to buy more shares, to justify to its shareholders why it's buying shares into their ETFs, etc., etc. But in order to do that, they must shake off the weak on the way back up. So I hope you guys found this video to be informational, inspirational, and motivational yet again on a Saturday morning. If so, guys, do not forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. If you haven't yet subscribed, you might want to think about doing so, because in this channel, we're waking up the middle class for the first time to get a major piece of the pie. And like 50 said, we get rich or we die trying, guys.